Bitcoin has been heading up for several weeks straight, and eventually these moves must come to an end. So is February the month that this move ends? Let's take a look at that in today's video using our Gann swing indicator, our monthly cycle analysis, the VIX, the Dixie, and a look at the S&P 500 for a more macro level indication of what to expect. If you guys haven't already, smash up the like button, subscribe, bell notification icon, and if you are wanting to get in with our TIA premium members, check out the link in the top of the video description. Our 2-year sale is nearly over. It's right here, tiacrypto.com. Check that out. Link in the top of the video description. All right, guys, enough with the shills for now. Let's have a look at what's going on with BTC for the month of February. I know we're at the 4th right now, so we need to get on with what's happening. First, I want to look at a monthly cycle analysis of Bitcoin with the years that we currently have involved in terms of the data. So we're looking purely at the data, and then I'll give you my opinion towards the end of the video and potentially sprinkled throughout, as I so often do. So this is the first year that we're looking at here. This is 2023. Obviously no data. This is what we are trying to forecast. Last year, we had February 2022. It was a green month, but I want to note here that the following month didn't move that much higher compared to what we currently saw in February. So you can see the top here of the bar, and then the March bar didn't really go that much higher. This is going to be a key piece to what I think is coming for February of 2023, just based on what we have seen in the past, especially after significant moves like we saw with January. In 2021, we saw a pretty good all-time high price, followed by March and April. But like you can see, the top to the top of April for the all-time high at that time was only 11%. Between those 3 months, the top of February, March, April, just 11%. So the market basically stopped pushing so much from February into March and April. So there really just wasn't that much energy left in the market before we saw a major reversal. In 2020, we had a move up in January, so a nice move from a low that formed in November and December, and the market pushed up into a top on February before falling over with the pandemic low. If we didn't have a pandemic low, the market was already starting to head down, so it may have been a higher low rather than a breakthrough lower low before the market basically bounced pretty hard out of that low. So nonetheless, there was basically the stopping volume and stopping price around February. Going back to 2019, we can see that the market again formed a low around November, December. We had January just going sideways, February again sideways, March sideways before we got that breakout. So there really wasn't too much activity going on in February. Going back to 2018, we did have a big bounce into this low, which formed a dead cat bounce from February. And then the following couple of months, all of the price range of those months was contained within the price range of February. So not much happened after February at that point. However, in this case, February actually did have a bit of a strong move to the downside. But remember, that was at the beginning of the bear market. Going back to 2017, right in the middle of a nice solid bull market. This is a bit confusing for a lot of people, not knowing whether this was the end because it just started to break through the previous all-time high. The market then reversed into March. So we're concerned with what's happening in February. And just as a measure from the top of January to the top of February, it was only a few percent at that time as well. So the majority of the move had already happened as it led into February, and then of course March as well. So from the top of February to the top of March was about 8.8%. So this is all coming together right now in terms of what to expect for February, and then we'll get into some more shorter term timeframes as well. February of 2016, all of the price data was contained within the November bar, like you can see here. So all of the move had already happened, and then the market needed some time to decide whether it was ready to go up or it needed to accumulate more. And of course here, it accumulated more before the market then pushed again. Going back to 2015, so this was the bottom of the market. We had that drop into January. The market bounced out of that and then again had to go sideways to figure out whether it needed to accumulate more or distribute before it was to fall, but in this case, it obviously accumulated, market went up from that point. So February, the move had already happened prior to that, and February was basically the month of figuring out where it wanted to go from that point. Going back to 2014, the start of the bear market, you can see February was a significant month. You saw a big drop from December. January was trying to figure out what happened, and then February, it decided what it wanted to do. Very similar to what happened in 2018. You saw the peak in December, January trying to figure out what it wanted to do from that point. Obviously, it was trending down, but the big move from February into the dump and then the bounce out of it again into a dead cat bounce was basically the end of that first move before the market then went basically sideways and down. Going back to 2013, this is where things get a little bit different. So this is in the midst of a bull market here. So kind of like 2017 where the market was just heading up. February was another good time where the market just kept going and didn't look back from that point. 2012, we saw the market again. No real movement there. And it was basically an accumulation period before the market decided to move higher again. 2011 wasn't too much of a move higher from January. So top to top, you can see it's 30%, but remember, these are very, very small prices at the time. And the January top was 85 cents, leading to the next top of $1.10. Crazy numbers for Bitcoin. But you can see here, February was a new top in this price range here, but then March basically held the line at that point. And there wasn't really too much movement from January into February. What we can estimate from this, especially after a low, a significant cycle low, potentially the cycle low, and then a significant move out of that low being January, what typically happens is February isn't a very strong month to the upside. Doesn't mean we won't get any upside because of course we have had some upside. It's been a higher month than the previous month. In this case by 1%. Maybe we go that extra mile and take out that August top, which could potentially give us a 5% growth from the January top, or we come up and start to test some of the previous resistance levels that was set back in June 2021. That would give us a 20% upside from the January top, but that might be getting a little bit too excited for the month of February. Maybe we see that later in the first half of 2023. So like we saw looking back, basically out of the month of, if January was a significant move to the upside out of a low, we saw that February was kind of that turning point or not much happening. So essentially the message here is avoid the FOMO at this point. Maybe we do see some slightly higher upside, but it seems like that in terms of the timing aspect, it's just running out of steam. And with that in mind, let's drop it down a time frame here and have a look at some more recent history for what's happened on Bitcoin, getting an understanding of that time cycle. So we're going to measure from the bottom to the current top. And this is 10 bars. So we're trying to figure out whether it's worthy of getting involved in the FOMO now and hoping that this move that we've seen for the last 6 weeks from late December into January or early February continues on and we're going to miss out on another 50% move, or is it probably more likely that the market is running out of steam to the upside for now in a more micro look at the market, maybe on the daily to the weekly time frame, which means then we can wait and look to see where the market pulls back. If it pulls back to anything significant, like we looked at in the recent videos, maybe it only pulls back to the previous tops at around $20,000. Maybe we're lucky and we get to 18 or anything under 20. But if that doesn't happen and this starts to trend sideways, which is what the data is showing, February is a reasonable time if January has gone up for it to potentially track sideways, relatively speaking. Then we could get ready to get on that next bandwagon for the market to move up. Now, a massive note to that, we could also see March do the same sort of thing, track sideways or maybe dip its head a little lower. So we have to wait to see what happens at the end of February. But for now, just looking at February, it looks like we're probably running out of steam, which may mean we just track sideways. There's option 1, or we dip lower. That's option 2. That's just looking at the data. So we just looked at this being that we're up 10 weeks from the bottom before we've seen a significant reversal. Let's go back and look at where these red markers are. from the bottom to the top, that was 9 weeks. So bottom to top, 9 weeks. We can take this off the chart now. And then going back again for the last significant move in the bear market, bottom to top, 9 weeks again. So in each of these cases within the bear market, we've had 9 weeks from the bottom to the top. We've had another 9 weeks bottom to the top, and we're now currently sitting at 10 weeks bottom to the top. That would be a good time to see at least a pause in the market direction, a pause in the price increases, and for the market to decide what it wants to do next. Maybe we track sideways for February or into the early part of March. Maybe we do get that slight dip with some sort of bad news that is due to come out in the future. But essentially, the timing is saying a potential pause or a potential dip. I'm leaning more on the side of a potential pause, possibly somewhere down to these higher levels here, that probably somewhere to around that $20,000 or $21,000 level. So that's my opinion based on the data that the chart, that the market has given us. Let's see if there's anything else that supports this look at around 8 to 12 weeks, somewhere within that 2-month period of a market moving in a particular direction before it gets a correction or a move against that particular trend. Now, there's another point in the market here. Basically, after this COVID crash dump, the sellers had again dried up and the market moved pretty quickly out of that low. So I'm using that as a time frame. You got 8 weeks to this first peak before the market reversed, or you could use this time frame around 12 weeks. So if we go to the 8-week point here, you can see that the market basically stopped moving up from that point. In terms of a percentage move from the top of that bar, that was in May, to the top of the next top here in June, is only a 2.8% move. So really you could say that the move out of the low, all the energy had been used up in that first part, which was around 8 weeks. And then this was basically the market tracking sideways, just buying time, catching up in time before the next move was ready to begin. So that's what I want to look at when I'm comparing past market data to the current market data. This is a little bit more subjective. What I've used at the beginning of the video was more objective, just looking at what's happened in the past already. But this takes I guess a little bit of skill, depending on your skill and how long you've been in markets, with what you're comfortable with using in terms of the data from the market. Looking at the stablecoin supply ratio oscillator, it's from Glassnodes here, we can see a pretty big uptick in the stablecoin supply ratio. So basically, this is stablecoins being deployed to the market. Now, often when we see a big move from stablecoins being deployed into the market, there is the price increase of Bitcoin. You can see in each of these occasions, some pretty significant rallies have occurred. Obviously, we need to get a pause or a time where the market will basically reverse from this point. That doesn't mean that the prior cycle lows will be taken out, but it does mean that eventually the money needs to stop flowing for a period, find out what the market wants to do next before the smart money is ready to decide whether they want to keep dumping the market or if it's time for the market to continue up again. And so look at the stablecoin supply ratio, lets you see when this money is coming in and when it's coming out. And you can see back here in May, which I use as an example in today's video, that the stablecoin supply went up, it came back. However, the price range did not come back very significantly. And this could be what may occur this time, depending on whether you believe that we are in a mega bear trend, and once the stable coins come out of supply, that we go on this big drop in price. So the black line is price, or if you believe we are more in an accumulation period or transitional period, which I've talked about on the channel before, where even though the stable coins may come out of the market, the price of Bitcoin may just trend sideways until time is ready, until time catches up to when that next move is about to take action. Now, there's a few more things that we wanted to cover to potentially support this theory. We're looking at the VIX. This is, of course, the volatility index for the S&P 500. We are seeing a pretty significant downtrend here. And like we've covered many times before, once this drops below 17, what we've seen in the past is a move up on the S&P. The volatility is dropping, meaning there is less craziness going on in the market, and it has tracked between 11 and 17 on many of the previous occasions where the S&P was climbing. So as the S&P climbs, people are more interested in investing or trading in riskier assets, and crypto and Bitcoin are riskier assets at this point in time. So you can see here when it's between 11 and 17, these were those times in the market where the S&P was trending up. Yes, we have some spikes out of it. These are market bottoms, and these are also some market bottoms as well, but less significant. And these are the times that we want to see on the VIX for the S&P to continue climbing. So that's what we are currently looking at right now. It climbs on low volatility. So those two pieces are coming together to potentially support the theory of Bitcoin at this point. And the other piece which has been working out is the dollar has finally bounced from a low point here of a 100.8. So, we've been tracking this for quite some time. We've looked at the top being September, basically calling that almost to the day, at least putting out a warning, believing that that was the top for many reasons that we've looked at already. Market has finally come back down, and we are seeing a reversal here on the US dollar. And we know that this often leads to some pullbacks for crypto and Bitcoin. However, for now, at least, Bitcoin has been quite resilient to the move up on the USD. So the USD, the Dixie is moving up. Normally we see Bitcoin drop, but it is acting quite resiliently at this point in time. So that could mean that we do track sideways while the US dollar goes on its move to the upside. Finally, its expected rally that we've been looking at for this entire time for the downside. We were expecting approximately 1 to 4 week rallies, which is what we've seen in the past. This time frame works out relatively well with Bitcoin, as we've seen in the past. It could be the month of February that Bitcoin tracks sideways or slightly down. Maybe we lead into that final drop into that March-April period, which we've talked about before. And we can basically see a lot of this analysis coming together with the market cycles of the Dixie, the S&P, the VIX, of course, the volatility for the S&P, and how this is playing out in the price chart of Bitcoin and what I'm expecting here. So essentially, after looking at all of that objectively, subjectively, some of which is my opinion and how I'm playing the market, because at the end of the day, I am an investor and trader, and I have to put my money in the market at some point, or keep it in USD, which is essentially still in the market. And I'm just playing at the whim of whatever the US dollar does. What I can see from this is we're probably due for a pause or a correction in this rally, so a bit of a pullback. And it seems like the timing is about right for February to have a top, which we're currently on this week. Maybe we go that little bit higher, maybe we don't. And the idea here is that we potentially track sideways as a best case for the bulls, or if you're looking to buy some more, maybe we get that pullback, which we'll have a look in future videos. If you've been enjoying the videos and they've been helping you in your investing, let me know in the comment section with a cash emoji, cash bag. Otherwise, smash up the like, subscribe to the channel. I'll see you guys at the next video. And don't forget to subscribe to our free alpha report and, of course, our 2-year anniversary sale, which is almost over. So get into that now. I'll see you guys at the next video. Until then, peace out.